Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And taking a look at Wall Street, we've got some slight gains. The S&P 500 with a slim gain as investors build on the previous session's gains. And the broad market adding 0.2% to 5,777. The Nasdaq Composite up 0.5%. And we have the Dow Jones Industrial Average just slightly higher by 4 points, above break-even by 0.01% at 42,588. For more insights, we are joined by Nadine Terman. She is the CEO and CIO of Solstein Capital. Nadine, good morning. Welcome to the show. How are you doing?
Good morning, Ryan. Good to talk to you again.
Yeah.
I'm going to try to not have my filler words in there and be very careful about that after that bit.
Yeah, I'm sure we've all got our own favorite filler words, and there is a use for it. But let's get into the market action that we are seeing in the latest session. And looking at latest, we did see a bit of a late day rally in some technology stocks. What were your takeaways from the latest moves?
That's right. The day started off fairly green, but then there was the print about consumer sentiment in the U.S. that surprised people. Basically, U.S. consumer confidence hit the lowest level in 4 years. Basically, there's higher prices, and the potential for escalating tariff wars are making people concerned. And I think it wasn't just the current reading, which dipped 7.2 points to 92.9, because the median estimate was close to 94. It was really about the next 6 months. It dropped nearly 10 points to 65.2, which was the lowest reading in 12 years. So that got the market a little bit spooked, even though it did end up. It was, I would say, a damper on the market for much of the day. So tech did rally very, very late in the day, but I think people are a little bit concerned about tariffs and then the consumer confidence.
Yeah, how is this going to play out into the markets in the coming quarters? Because you have consumer sentiment being so low, you might expect retail folks and even IT budgets or marketing budgets to be cut to some extent.
That's right, and I think a lot are on pause too. So I think on the labor front, people are concerned about losing their jobs, but in reality, the data is pointing more to maybe companies won't hire as much. They may reduce hours for people or reduce pay. So that still will decrease spend and or put purchases on hold. And then in terms of companies outside of the AI spend, I think what you're going to see is a lot of CapEx budgets being paused. Right, Ryan, is that if companies are going to invest, they really want to know what are the rules of engagement. Are regulations changing? Right. Are taxes changing? Are tariffs changing? So I think you're going to see a lot of pause, which in the upcoming quarter, I think you'll see on slowing growth as well as maybe higher costs and lower CapEx spend, which will be perhaps concerning if companies will be able to reach their second half earnings estimates and or growth estimates. It'll put it into question a bit.
Yeah, as a business, you would need that degree of clarity to make some long-term plans. So without that, it does make it a bit trickier. Well, in terms of corporate deal-making, what's your expectations of how this could play out?
That's right. I think everyone's looking for CoreWeave. What's happening for the IPO? I'm getting some details, a little chit-chatter on it. While people are talking about how much it's oversubscribed, it seems that there could be some concern about placement of shares. Might be some of the players taking the shares to make sure that the IPO is successful. That's on one hand. And then two, because companies are concerned about the rules of engagement, whether, again, it's regulation, tariffs, or likewise, I think that the deal activity you've seen, the year-to-date numbers, be pretty low. And you have companies, and especially financials, coming out saying that it's lower than expected. Folks have been on pause. So you really need some of the near-term M&A and IPOs to be successful, I think, to unlock the future. But that's in addition to having a bit more clarity. So I think there's going to be a lot of wait and see after April 2nd to see, is there any clarity? If not, you're going to see it turn from what people thought would be a banner year for M&A and IPOs to something a lot more lackluster.
We did get the FOMC meeting in recent days, and we had Jerome Powell saying, no, things are not that bad. No, they've kind of put 2 rate cuts on the table, and some folks are saying maybe there won't be a recession. What are bright spots you're looking at here?
I'd say, Ryan, some of the bright spots have been in Europe. Europe's done quite well. You can look across from whether it's Spain, Italy, Germany. Because valuations were so low on a relative basis, it's been stronger. The currency's obviously been strong. The dollar's been weaker. So that's been globally a brighter spot, as well as until last night, China's been a fairly bright spot. There still needs to be clarity on these tariffs and any kind of retaliatory measures. So I'd say internationally, there have been some bright spots. You could look at Poland. You could look at Argentina. Some really amazing EM countries that have done quite well relative to the U.S. year to date. But here in the U.S., I would say that we probably need a little bit more weakness before I'd say this is the time to jump in. Certainly, tech came off a bit, but you've had a rally since last week. We're showing here overbought signal, so that's the place that we'd be shorting versus going and entering. But energy is fairly unloved. There's certain parts of materials, obviously not copper. Copper's at the height. But there's little pockets that are unloved, but we're not quite sure if those are ready to pounce quite yet, given a lot of the uncertainty and how much people have already placed in the market. We saw a lot of dip buying, and that makes us a bit more cautious.
Yeah, talking about pockets that are getting love. We've got AI, of course, seeing a lot of attention these days. What's the playbook here? Is it to look at China more closely, especially with DeepSeek and all the industry players starting to come up with their own various products?
I think there is. I think that on a relative basis, we're more interested in international companies just because last year you just saw such a buoyant market here for big tech. I'd be a little bit more concerned. So we're looking a little bit more on the short side where people are talking up their AI. I'm not going to name names, but there's some tech companies that we think are going to have a lot harder time in the for cash flows and growth in the future, and their margins will be eaten away because they don't have the same moat with AI coming down the pike, not just here in the U.S., but globally. So we're looking a little bit more as a short opportunity given just the massive run-up last year versus, I would say, new spots to be placed in because everyone bought up utilities, everyone bought up data center infrastructure companies, people bought up the AI tech companies themselves. So that's, we think, a little bit less ground for investment than perhaps taking the opposite side.
Yeah, so a close eye that's being kept on what's happening in the coming days. And of course, the April 2nd reciprocal tariffs will be very closely watched as well. And that's also something to look out for when it comes to oil prices because Donald Trump has said anyone buying from Venezuela will get 25% tariffs on them. How do you see this playing out for oil prices?
Right. So, these types of what we're calling secondary tariffs, it's basically to say, and it's really against China, right? Let's just be clear, is that if you're going to be buying the oil and gas on the secondary or kind of black market, then we're going to impose tariffs on you. So it's trying to deter that. That should be an increase for energy prices. But right now I'm thinking of it a little bit more as a bargaining chip for the upcoming tariff announcements versus something that they're really going to do. So we'll have to wait and see.
Yeah, lots of waiting and seeing, and that's keeping investors on their toes as we count down the clock to April 2nd. We've been in conversation with Nadine Terman. She is the CEO and CIO of Solstein Capital. Nadine, thanks for your time. Always great chatting with you.
Thanks, Ryan. Have a great day.
All right, looking forward to having you back on again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.